And you are a garden entwined with all. You are the silence on sacred shores. You've got diamonds for teeth, my love. So take a bite of me just once. I want to turn the page.
morning. All right. I've already got a problem. I can't speak because I can hear myself. I can hear an echo. Hold on. Okay. That's a little better. Now let's go to the properties. Desktop. Ah, here we go. Turn the nope. Monitor, oh yeah. Monitor only, mute only. Okay. Yeah, I can't figure it out. So headphones come off. All right. Good morning, everybody. Good morning. Welcome to Lunar Beach's Crypto, where we ride the waves of the crypto market all the way to the moon. Today is Sunday, October 27th. We're almost at the end of October. And yeah. Been getting some requests for some Elliot wave theory stuff. Not really a request. Some friends have been expressing how they need some classes for Elliot wave stuff, and you know, I can just come on here and explain some stuff for free, and we'll happily do so. Let's go ahead and shout out the chat. Good morning, Alex O Crypto, and good morning, Melissa One Love. Yeah, not a whole lot of people in here right now, but that's fine. We will be, we'll just go ahead and start, guys. All right. I don't know how else to start other than, just to give like a brief overview of Elliot wave theory. So what I'm going to do is I'm just going to show you guys. Oh, I lost one. All right, so I've got one of you in here. That's fine. I should. Here, let's still go ahead and hit record. Let's see if that messes with the stream at all. Hey, welcome to Lunar Beach's Crypto, where we ride the waves of the crypto market all the way to the moon. Today, we're going to be going over Elliot wave theory foundations. That's what we're going to be going over in this video. If that is something you like, go ahead and smash that like button. Sub to the channel if you are new, and hit that notification bell to be notified whenever I create new content and when I go live. So first things first, what is Elliot wave theory? Well, it is a market theory. It is market structure with rules, is how I've always kind of explained it. It's just market structure with rules. Your most common waves in Elliot wave theory are 5-wave structures, impulses to the upside or downside, with 3-wave corrective moves like this. Today I want to go over, basically just going to go over flat corrections. Hey, all set. Oh, I forgot. I'm doing a video, right? So yeah, today I want to go over like flat corrections and what exactly those are. And yeah, I mean, there's different types of corrections, obviously, but flat corrections tend to be pretty easy and most common. But yeah, so in Elliot wave theory, like I said, we have 5-wave structure to the upside and a 3-wave structure for correction. Well, 5-wave up or down with a 3. So that can be, would be in a bullish sense, okay? And then we would have bearish, where you 1, 2, 3, 4, and 5. And then we would have the correction looking like this, A, B, C, right? And then what happens usually after that is we get our moves to the upside or downside. You know, we get 1, 2, 3, 4, 5. Now, Typically, the longer this goes on, the deep or the more vertical you're going to get, both up and down. But that's neither here nor there. We're just counting waves today, okay? Let's go ahead and get rid of the downside one. Now let's go ahead and put in another correction. We've got A, B, C, okay? Typical ABC correction. We're not going to do any of the fancy schmancy corrections today. All right, just typical ABC corrections. And then 1, 2, 3, 4, 5. Okay, typically the third wave is what breaks the high. Okay. All right, so with that done, we can see we have 3 impulse waves to the upside with 2 corrective waves in between. And what does this inevitably create? It creates one large, 1, 2, 3, 4, and 5. So we've got all of these waves within these waves. Throw some waves in the chat, but we've got waves on waves, okay? Waves on waves, waves everywhere. Okay, that is Elliot wave theory. There's waves everywhere. Okay. Good morning, peeps. Good morning, Army Piper in the house. So within each wave on the macro scale, we have little subdivisions of waves within the waves. So this is your corrective structure, and then we have the impulse moves to the upside. So anytime you hear me talking about impulsive moves, I am talking specifically about 5 wave structures, impulse or motive waves. Now, the reason why I'm always looking for these, because they are typically the start of trends. So when you're coming off of a long-term correction, or you're coming from like a downtrend type deal, we want to see, oh, I forgot that I had that on. We want to see an impulse to the upside to give us our potential for reversal. Without the impulse, if it is just corrective in nature, by Elliot wave theory rules, then it is likely that we will see continuation of whatever the trend is. But if we get the 5-wave impulse, that signals that we could be seeing a reversal in trend coming off of the lows. So that is why I'm always looking for those impulsive moves off of the lows, is because it helps me confirm that we have reversed in trend. Now for this, I would continue, you can continue this. This would just be a much larger correction here, A, B, C, depending on, you can have different types. Like I said, I was just going to do flat corrections, and I'll explain what a flat correction is also in today's video / live stream. So we've got the flat correction, bigger flat correction, okay? Then we have this A. So this ABC is based off of the yellow one, so we'll just go ahead and make this one orange. So, but inside of here, inside of this corrective wave, on the larger time frames, we're going to have the A, B, C inside of it. Let's see, I have those as white. So let's see, ABC inside of that. And this is where, once we get an ABC like this, I'm sitting here, I'm like, okay, is the correction done? Meaning, is the macro ABC, being this orange one, is it done? Or are we going to put in an impulsive move, or is it going to fail to break the high and then correct even further? This is going to be important because this is kind of what I'm looking at on Bitcoin at the moment. So I'm seeing an ABC to the upside that started off looking like an impulsive move, but it's looking more and more corrective as the days go by. So I am expecting further downside on Bitcoin. We'll get into that, but stick with the Elliott wave theory for now. So we've got the move. So this is the corrective move right here. So then from there, I will be looking for what? An impulse. I want to see 1, 2, like I said, third wave is typically what breaks the highs. 3, 4, and then 5. Now this one's going to be the macro, so yeah. And then inside of that, on the lower time frames, that is where I look for the impulses to start. I want to see a 5-wave structure in here, right? And then I want to see, a correction of some kind, ABC, and then I want to see another impulsive move to the upside. 1, 2, 3, 4, 5, all within that third wave. Now, rules. The main rules for Elliott wave theory for these structures are as follows. First, wave 2 cannot go below the start of wave 1. Obviously, this is not good. This is showing mega weakness. We cannot trust it. Typically, I want to see like a 50% to a 618 or 786 retracement. I really don't want to go lower than that. We can go technically all the way to the 887, 886, 887. But those tend to not be as strong of moves. I do prefer the 50% retracement. Those seem to be the best. But 618s aren't too bad either. 618s and 786s. 618 would be somewhere in between here, right here. So yeah, but as long as we're not breaking the start of wave 1, we're good. Okay. Second rule. Wave 3 cannot be the shortest wave. Does not have to be the longest, but cannot be the shortest. So we want to see wave 3 be the not be the shortest wave in a 5-wave impulse. If it is the shortest wave, then it is likely that it is not a 5-wave impulse and it is a corrective structure. So validations on that structure. Perfect, thanks. Oh. I didn't even see that, but I got to it. Thank you. Did you drop this on the Discord? No, I didn't. I'm sorry. I'm kind of rushed the start of this whole thing anyway. And that's why I hit the record button so I could just share it later. Not just the live. So that way we could cut out, the beginning music as people are, coming in here. And I'm going to have to cut that out for the video. But anyway. So yeah, those are some invalidations right there. And then the last one is going to be wave 4 cannot come into the territory of wave 1. Now, to make this a little less confusing, let's go ahead and get rid of all of this. And let me just go ahead and draw a 5-wave structure to the upside. And let's make this yellow a little brighter. All right, so wave 4, so 1, 2, 3, 4, cannot cross into the territory of wave 1. Okay, that invalidates this structure. If you cross into this like such, then you're likely not going to get that wave 5, and instead, this is nothing more than an ABC correction. If that comes down and that happens, if it crosses into the territory of wave 1, then it's likely that this is just an ABC correction and we have more downside, and this is likely just another ABC like this. So get rid of the yellow one because it's not a 1, 2, 3, 4, 5, and instead it is just a corrective structure. Bonus points if we come down and break this low here, because that would really tell us, all right, price is kind of weak. But yeah, definitely breaking into that territory of that wave 1 would invalidate the 5-wave impulse idea. And that's basically that's your foundations for Elliott wave theory. Is there's not much more to it than that. That's your basic foundations. Don't really need much else. You got your 1, 2, 3, 4, 5, and your ABCs. Now, there's a lot more to it, of course, but I'm gonna have to practice going over that. You know what I mean? I'm gonna have to practice going over that because it's gonna be like talking about it. Because I can do it in my head, but explaining it out loud is a whole different other story. So what I look for, whenever we get to the end of a 5-wave impulse, I am looking for some type of correction, whether it be a flat correction, which I do like to see more often than anything else, or that I do see more than anything else. And that is essentially a correction that is based off of the first wave, the A wave of a structure. So let me go ahead and get rid of this because we can also see this come up as an A, B, C, D, E. So we'll have an A, B, C, D, and then E. Corrective type of structure. Actually, I don't like that. Let's do the ABC. 1, 2, 3. All right, A, B, C. So typical flat correction, first wave. So we've got 3 different type of flat correction. You've got your standard flat, which is just you hit the top, you hit the bottom, you hit the top, you hit the bottom again, and then you impulse. Come on now. You impulse to the upside. Okay. So another type of correction is a running flat. That is when you come up and you cross the top over here, and then you come back down, but you don't break the low here, and then you impulse off of that low. Then you have an expanded flat, which is when both sides of the range get taken, and then you impulse off of that. So 3 different type of flat corrections. You've got your standard flat, your expanded flat, or your running flat, and your expanded flat. So expanded, expand outside of the range. Running flat, we're leaving the ground running, right? We're just leaving them running. We're not coming back down and tapping this. And this tends to be a pretty bullish one right here. The running flat is pretty bullish to me. Because if you look at your standard flat, what does that do? That creates equal lows. To me, equal lows will always come back to take equal lows. So that is how I would. That's why I would expect us to come back and take those equal lows. It also creates equal highs though, which helps us push to the upside because we know we want to take the highs, so we sweep to the upside, and then we sweep or we can sweep to the downside, and then we sweep to the downside. So I typically like to see just expanded flats or running flats because I like to see one of the sides taken. If it's going now, one thing, yeah, we can do that one right there. So this doesn't create equal lows, but it does leave equal highs. This is just a standard ABC correction. Actually, this would be your standard ABC correction. I'm not really sure. Yeah, that could be an ABC correction. But yeah, we leave the equal highs here, and then we can go ahead and keep running. Now this is more of a running flat, but it's like upside down. So yeah, maybe I need to be a little more versed in these flats corrections, but I know what to look for. I know I'm looking for an ABC. I know I'm looking for an impulse off of the low. That's what I know I'm looking for. I'm looking for the impulse, especially or particularly on these lower time frames, because I want to see this begin to impulse. So I'm not just looking for this wave 1 to come out and take out the highs here. I'm looking for smaller waves inside of that wave 1. If this gives me an impulse off of this low on the smaller time frames, like 15-minute, thinking about these being more of like 4-hour and daily type of waves here, this would be like your 15-minute time frame right here. So that is what I'd be looking for on the lower time frames. A nice big push to help break the highs, and then we get the the slight correction off of that, whatever it may be, running flat, expanded flat, just a standard zigzag ABC down, whatever it may be. That is where I'm going to be looking to go long. If I have identified a 5-wave structure, I am looking for at least a 50% pullback, and then from there is where I would go long, because I see the impulse off the lows. I've taken the highs. I'm getting a correction. I'm getting that pullback on the fib. This is going to be your best, risk to reward. Not financial advice in my opinion, but I'm not telling you to buy anything or anything like that. So that is going to be your best risk to reward. Why are you being like this? What are you doing? What is my long position tool doing? Oh, is it because I'm in the millions? That's why. I'm at almost at a $1 billion Bitcoin here. So that's probably why the long position isn't really working. All right. So yeah, after we break that high, look for that pullback on the lower time frames on the 15-minute or so, and then yeah. So that is kind of what I am kind of seeing on the Bitcoin price chart. Go to the 15-minute. Let's go ahead and take a look at these candles here. So let me go to the 1 hour. So yeah, right here, this is kind of what I'm looking at right here on the Bitcoin price chart, is an ABC correction in here, something of the sort. I would not be shocked to see price come down and at least retest this imbalance in price right here. Got a nice little gap here that we could come down to for sure. And I like to marry this with other stuff too, so it's not just Elliot wave theory. I like to see, this almost looks impulsive, but that's more of an A, B, C to the upside, because that third wave, it might not be the smallest wave. But anyhow, what did I click? Okay. So right there, we can see that that's where the trend broke, and then from there we can do a measured move from the breakdown to the low, and that gets us almost down to that inefficiency. So that could expand further, especially on a perp chart, where we have a little more volatility, and we can go a little bit higher or lower when it comes to these prices. So let's get rid of this. Let's see. Can you perfect? Thanks, perfect. Can you explain 1 2 1 2 correction? Is that the same thing as what you are showing on flat correction? Good morning, Mike Play in the house. Walking my dog and listening to TA. 1 2 1 2 corrections. 1 2 1 2 corrections. I'm gonna have to see exactly 1 2. 1 2 1 2 corrections. Not corrections, facilities. 1 2 1 2. Because corrections in Elliott wave theory are 1 2 3, or 1 2 3 4 5, or 1 2 3 4 5 6 7. Typically, you get 3, 7, 9, 13 on your corrections, and you get 5 5-wave impulses, sometimes 7 waves. I'm mostly just looking for the 5 and 3 though. 5 and 3. It's simple. It's easy. I'm not really looking to go too much more to that because for me, Elliot wave. I use Elliot wave theory as just like a foundation for market structure. That's really all that I'm using Elliot wave theory for, personally. So, getting a little bit of move on Bitcoin right now. Look at that. Now I am on the index chart. Let's go to, no, let's keep it right here. We'll be right back. Let's keep it right here. All right, one of my coworkers has been learning Elliott wave. Seems like a powerful addition. It can be, yes. I think they are the flat corrections by another name. Yeah, it's possible. It's possible. Let me see. Elliott wave. All right, so now I'm just trying to see what are we doing here on Bitcoin. So that kind of looks like a 5-wave impulse there with a 1, 2, 3 ABC to the downside. What was the pullback to? Pull back down to the 886. Those typically aren't very strong, but we have some nice lower wicks here. Now this could have wrapped up. So let's just go ahead and say that this is let's just go ahead and say this was an impulsive move. We got 1, 2, 3, 4, 5, something like that. Okay, then we have an ABC, A, B, C. Okay, we put in a low, correct to the high. This is kind of like a flat correction here. We can see. Let's just go ahead and draw this. Let's see. We create a little bit of a consolidation area, and then we continue, which is basically what a flat correction is. It's a consolidation area and then a continuation. So yeah, and then off of that, we might have put in. This really doesn't look very impressive to me on the Elliott wave front on a 5-wave structure. This move looks more corrective. But we have strong pushes up, correction, strong push up, correction, strong push up. So the question is the third wave, so if this was our third wave, is it the shortest wave in the move? That would be a yes. So by Elliott wave theory rules, this is not an impulsive structure. And it is corrective. And it does look more corrective to me personally. So I think that it could be more likely than not that this is a larger ABC, like I had shown you earlier. And we've got ABC inside of that. We got another ABC inside of that. Another A, B, C is what I would be looking for here. Okay. I'd be looking for another ABC within this to create the C leg of this more macro A, B, C. We have a fair value gap here that we are coming up into right now on the 1 hour. And we also have this resistance, of course, on this wick here. So that is going to be another area of interest. We can go ahead and pull the fibs. Okay, so the upper area of interest gets us more into our preferred levels here. So we could see come up here, get a bounce or rejection off of these highs here, and then push lower to give us, to finish off our ABC correction, maybe get us down to that inefficiency over here on this candle right here. So yeah, one big broader move, and then from there we look for, on the lower time frames, impulsive moves. Okay, that is what I would be looking for. So whenever we put in a low over here, I'd be looking for those impulsive moves to the upside to get us out of here. Low time frame. Let it create wave 1, and then I would be looking for the pullback for wave 2, and that is where I would look for my entry, because then I would be expecting higher prices from there. Make sense? You're awesome. Piper Academy is stacked with knowledge. Thanks, bro. Piper, you have a bad team. Nice group of talent, bro. Much appreciated. I heard Cones talk about them and didn't understand it. Never heard of a 4-point correction. Yeah, I mean, I've heard of it before. It's just, and I know what you're talking about, 1 2 1 2. I just don't use them personally. I mean, Cones, you know, I'm starting to watch his stuff a lot more because he goes way in depth in this stuff, and I really like it. Go shout out to him. Go follow that guy. He's a freaking savant with these Elliot waves, and he's the best that I've seen. A lot of people get this stuff wrong, and I immediately turn it off. So, and he's one that not only gets the easy stuff right, but also can go in depth with the more difficult stuff. You know, there's all different types of corrections, really, but this is going to be your main one right here. Your ABCs and your 1 2 3 4 5s. Period. Point blank. Period. That is what you're going to see. I am always going to look for an ABC, and oftentimes, you know, like a 1 2 1 2. Let's see, 1 2 1 2. Like even inside the 1 2 1 2, you're probably still looking for, you know, ABC structure. So you're probably still looking for your zigzags within that structure, right? Even if it's just a 1 2 3 4 or 1 2 1 2. Oh, your 1 2 1 2s are probably going to be more like your double bottoms and your double tops. That is what it looks like to me. A little more, you know, because this is, and especially if the waves are corrective in nature, not impulsive, then you're looking at possible double tops or double bottoms, depending on what part of the trend you are in. If you're at a high or if you're at a low, then you're looking for those double bottoms and double tops. The Elliott wave theory is also like these corrective waves, you know, fancy ways to consider them is, you know, or you can consider them just fancy ways of identifying double bottoms, double tops, triple bottoms, triple tops, just other types of market structure. One thing that you can marry with Elliott wave theory that is very powerful, that really helps with seeing the institutional order flow, is marrying Elliott wave theory with Wyckoff. So just something to look into in your spare time, maybe one day. Well, not maybe one day. I will go over it one day. But yeah, marrying the Wyckoff with your Elliott wave theory, you can really start to get like a, you know, more of an institutional understanding of price action, of what they're trying to do with the price to trick the most traders, to get the most people off guard, catch the most people off guard, because when you catch people off guard, they tend to act impulsively, for lack of a better word. But yeah, they tend to act impulsively, panic sell or panic buy, aka FOMO. So what happens is the institutions like to, you know, they'll drive price down really fast, okay? And that gets a lot of people to sell. But the reason why they're driving price down fast is that they can buy at a lower price, big orders. So they drive down the price to induce liquidity, induce players into the market, so that they can then, get their big orders filled. So they're big buy orders if they're pushing it to the downside, right? So they're like, we need to engineer liquidity in the marketplace. Let's throw out this news article, this random news article that is bad news, that it's, you know, whatever. and let's drive the price down. That way we can get an influx of sellers, therefore making it easier for us to get our bulk buys into the market and filled. So, and they'll do the same for like the top side as well. That's why I'm always cautious when I'm seeing positive news article, positive after positive news article after positive news article when we are at the highs and we are at resistance, because I'm just like, okay, they're just trying to induce liquidity into the market so that they can sell while you're buying, because they're just pushing the narrative. It's just positive, positive, positive. Buy, 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 buy. You can't buy unless someone is selling. Just know that, okay? Remember that. Nobody's buying if nobody's selling. You can't buy if nobody's selling. You can't sell if nobody's buying, okay? And remember, narratives like to show up at bottoms and at tops, okay? Like big narratives. So just be mindful of that in your everyday trading. Give me a call later, bro. Gotta bounce. Much love. Yeah, we'll do, man. We'll do. Appreciate you. One of my buddy uses ICT method and nails entries often. Yeah, I mean that's something I've also gotten into as well. I mean, I'm like the jack of all trades. You know what I mean? Jack of all trades. I know I can do supply and demand. I can do a little bit of Elliot wave theory. I can do a little bit of ICT, aka smart money concepts. I can do. I mean, whatever it is, I've got probably a surface level understanding of it at the very least. So, because I've been interested in these charts ever since I first came across them. All I've wanted to do is learn more and more and more, and that's it. That is all I've wanted to do. Is just learn, and then put out into the world what I have learned. To try and help as many people as possible. And then I will try to create trading setups, or rather strategies, based off of these, principles, and this TA. So these the different types of TA. So that's why, I can sometimes seem a little, if I'm being honest, maybe a little inconsistent in how I'm sharing charts, but that's because I'm always looking for different types of things. Whereas, maybe it would be more beneficial if I just stuck to Elliot waves. Maybe it would be more beneficial if I just stuck to ICT concepts. But I like to marry them all together, to build confluence and, but yeah, I mean, well, not just build confluence, but it just really helps me personally look at the market and see what I'm trying to see. See what I'm seeing. How are you guys doing? Nice mixed bag. Yeah. Yeah, man. For sure. I try really hard to just identify as much stuff so I can reach as many people as possible and help as many people as possible along their journeys, help at least give you a basic understanding of this and that thing. That way, maybe that's something, you come to me, you can say, hey, what do you think about this? And I'll be like, all right, this and that about that. Then that'll help you decide if that's something you want to get into, right? If you want to go deeper into. So I think that's what I am personally good at here in this space. And can be used for. Use me. That's really weird to say. So if this is one single wave and this is a correction, this would get us to about the 50% retracement. Look at that. Wait, that's not it. get rid of that. Okay, there we go. Yeah, 50% retracement. Beautiful. Beautiful. So, yeah, that's what I'm looking for on Bitcoin is another move down. Now, if this does come out and take out this high here, oh boy, there's a couple of things that could be going on. Either we are in a larger flat correction where we have these highs up here, and then let's see, let's clone, and we have these lows down here, right? So we've got a flat correction. Yeah. So we can still technically come up here and still be correcting, even breaking this high. We could still have a correction. Okay, so the main thing is going to be going down to these smaller time frames and looking for impulses. Okay, on this little wave right here. This looks like it's coming more off of like a 114 or a 382 fib retracement, which is typically gives you a nice strong bounce. However, it's more indicative of engineering liquidity by the market maker to try to get you to buy because they're just pushing price so quickly. They want to get you in there so that they can sell. That's kind of how I look at it. So, yeah, I'm just looking for a little bit. I'm still expecting some correction on Bitcoin and the broader crypto market in general. So, either way, we could break this high and still correct it down. I mean, we could break 70K and still correct it down. If we are not getting the impulses that we need to see on the lower time frames, it's very, very possible. So, but yeah, got about 10 minutes left. So if you guys have anything you want me to look at, throw it in the chat. And I'll just give a basic look at it. Let's go over to the Blowfin chart and let's go over some chart prime real quick. Chart prime likes to do a lot of the dirty work for you, right? It's more just following trends and stuff like that. And this is why I really have a problem, not really a problem, but I do kind of struggle with indicators because a lot of my personal trading training has been to try and trade and learn how to trade without using indicators. And a lot of that comes from ICT concepts because ICT is all about no indicators. It's just identifying price action. But it's also something that is mostly and should really only be used when it comes to like trading on like the lower time frames. Like the higher time frames help give you your bias, you know, your bull or bearish bias. But the lower time frames, you really don't need more than time and price. Time, price, and news. News really helps too. Something I want you to do in your spare time is to go and look for days when there are news drops at like 8:30, like your unemployment claims, something like that. And look at price action and see if it's doing a consolidation leading up to that news, okay? If you're seeing a consolidation leading up to that news comes out, boom, pushes one way or the other. So let's say in this scenario, we push down. Almost always, I am going to be looking for an immediate move back to the upside because this looks like it's just breaking the lows and it's just to sweep the lows so that it can come back to the upside. Same thing if it breaks the highs, coming back down to the downside. I see this play out more often than any other pattern when it comes to news drops. There's a consolidation going into it, a fake out to one side, and then a push to the other side. This is one of my bread and butter trades right here. I was seeing this before going into news. Also, something important to note is that one of two things, well, actually, we can see this happen also, but usually you're going for a Monday high, a previous day high, weekly high, something of the sort on that push up or down, and then a flush down to another area of interest is what is going on. So if on news we are running up to like a previous daily high, that is also another place. That is where I can say, all right, this might be a good time to go short at this previous daily high, because we were consolidating prior to the news, and then we broke one way, came up, we swept that previous day high or that Monday high, whatever it may be, and now we are pushing to the downside. And when we are in this box right here, we're going to pretend that we're inside of this box, okay? This box is this box. When we are inside of this box, I am looking for a shift in market structure. Let me get rid of this real quick because I really want to. I'm looking for a shift in market structure. So basically, I'm looking for a high to come in, and then a low, and then a push up. And this is going to be on like your lower time frames. Inside of this box, I'm looking at 1, 3, or 5 minutes, no higher than 5 minutes. And I'm looking for this shift. I'm looking for us to come up. I'm looking for us to come down, sweep this low, and then I'm looking for a pullback into what is called a PDRA, or a point of interest. Typically, these are in the forms of fair value gaps or order blocks. Okay, so it's going to be one of those two, sometimes both. Typically, if you have both, then you're going to push through that fair value gap and go up to that order block and then push down. So yeah, that is, so looking for that shift in market structure, and then from there is where I would take my short. So inside of this box, that would look like this right here. I would take my short, place my stop above the high, and then ride down to that other pool of liquidity. So that's one of my bread and butter trades right there. That is something that I am always constantly looking for on news days in particular, okay? Heavy news days in particular. That is what I'm always looking for. And this can also come, this usually comes at 8:30 to 9:30 to 10:30 to 11:30 within that 4-hour time span. Then after that, we wait a couple hours. If there's some news in the afternoon, like an FOMC, then I am looking for the same type of deal. I'm constantly looking for this type of setup, no matter what time of day or whatever, as long as there's news involved, because this is mostly a news type of, oh, don't do that. This is a news based setup, okay? Because we are looking for liquidity to be engineered by the market maker so that we can push lower. All right, or higher. So there we go. There you have it. Let's see. I'm coming up at the hour. All right. So yeah, that's gonna be it for this one, guys. I'm just looking for. I didn't get any requests, so that's gonna be it. Yeah. So this week I'm just looking for a little bit more corrections. But if Bitcoin can prove itself, then maybe we won't just correct and we can continue higher. But I don't know. I still feel like we're going to come down lower. We got a previous weekly low sitting down here at about 62,420. So would not be surprised to see that swept. Let's go ahead and take a fib real quick. I'll take that off. Take this fib, high to low. Where is that previous week low sitting? Above the 786. So what if I put on 618? Let's put on the golden pocket. It's right above the previous week low. If I go from this low to this high, it's right below the 886. So either way, I think it would make more sense to sweep that low, possibly hit that 786 and be done. But I don't know. Typically, your A wave and your C waves are going to be relatively close in length, but it's not always the case. It's not always the case because sometimes the correction is a 5-wave correction. 1, 2, 3, 4, like 5. This typically isn't what you would really want to see, but you know, it still works. It still works. As long as we're not breaking this low over here, and we're not really going much deeper than that 886. Really wouldn't want to see it go deeper than the 786. And as long as this wave isn't coming up into the territory of wave 1, we went over that. And third wave isn't the shortest wave in the whole move. Perfect. So yeah, I mean, a 5-wave structure could make sense here. They typically do mark bottoms. 5-wave downwards 5-wave structures typically can mark bottoms, from my experience. But yeah, I'm trying to think, is there, yeah, and then from there just look for more impulsive moves to the upside. What do I have here? We do have this running trend line here, right? So we can go lower. We'll still be fine. We'll still be putting in higher lows. Yeah, still be putting in higher lows. I don't see, this is why I say I don't really care about the fact that we took out this high. You know, people say, well, we created a higher high. No, we didn't. We did internally, yeah, but this is our swing level high here. This is the one that needs to be broken because this is the swing high. If I just draw it out, it'll be easier to see. High, low, high, new low, high, new low. So that's important. We got the new low after that. Do we have a new high yet? No. We have a series of higher highs and higher lows. However, we have not broken the macro high, the macro swing high. So, yep. Still have work to do for now, but we'll see. We'll see. Getting some bounces off the dynamic reactor. It's kind of looking a little bullish. This doesn't really fit my rules for a double bottom in here, but it could be. But it's starting to look a little weak. It's getting into that fair value gap now, so and getting rejected off of it too. So we'll see what it does. If it starts to break down here, I would be looking for a sweep of the lows and then a back test of maybe the dynamic reactor into some type of PD array like a fair value gap, and then I would go short from there. So that's what I would be looking for on the shorts. Not even really going to be looking for any. Yeah, not really. Not feeling bullish at the moment. That could change though. But yeah, I'll see you guys over in the chat, in the Piper Academy Discord, and my Discord, link in the description below. And yeah, shoot me some chats. Ask me questions if you have questions. I'm more than happy to help you all in your trading journeys to the best of my ability. So yeah, just hit me up. And yeah, that's going to be it for this one, guys. Thank you all so much for joining me. I appreciate each and every single last one of you. Be safe. Trade safe. It is Sunday. We might see something unexpected coming this afternoon, this evening, around 5 p.m. Eastern Standard Time. That's when the markets open. So your futures markets, that's when the futures markets open, and your forex markets open. So yeah, we could see some moves, but yeah, other than that, guys, I will see you all bright and early tomorrow morning on Good Morning Crypto over on the Piper Academy channel. So be sure to go and check that out. We are also doing, $100 giveaway on the show, $300 total on the channel on Halloween. And tomorrow is your last chance to put in your Bitcoin price predictions for the Good Morning Crypto prediction contest to win the $100 from us. So put in your predictions underneath any of the Good Morning Crypto live streams up until tomorrow. Tomorrow will be the last day for predictions. And then on Wednesday, 28th, 29th, 30th, Thursday, we'll be doing the Halloween contest. We'll be picking the winner. Okay? So, yep. So be sure to go over there, check that out. And yeah, I will do my best in getting this the Elliot Wave stuff recorded or edited, and then I'll try to get that out to you guys so you can watch just that bit of this whole thing. And yeah, hopefully that'll help you guys out just on your foundations for Elliot Wave theory. But thank you all for being here. Mad love and respect. Thank you all for joining again for the 3rd, 5th, 6th time. And I will see you all tomorrow morning, bright and early, and in the chats all throughout the day. So I got some more packing to do around the house before we move. So obviously, so yeah, be busy between charts and boxes. Sometimes I'll draw boxes on charts. But anyway, thank you guys. Love you all. See you in the next one. Peace out.